Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
BTST time. Ashwani, thoughts on index first and of course your individual stock calls.
So index remains, I think, choppy, and trading the boundaries should remain the plan for the foreseeable future. But today I think you can carry shorts home and see what happens, and if tomorrow morning you open gap down, etc., you will have the opportunity to cover. For the moment, L&T Finance is a sell with a stop of 178, target of 166. Maruti is a sell with a stop of 9300, target of 9050. And USL is a buy with a stop of 590, target of 615.
Okay, so those are the calls the last half hour, turning into reverse trades tomorrow. Let's get back to our conversation with Basant now. Basant, just before we lost that line, what I was trying to ask you is that the index is back, of course, at historic levels. What about portfolios? I mean, what have the last, let's say, 2-3 months meant for you?
No, for us it has been phenomenal because we've like kind of always looked up at buying quality stocks, growing at faster rates, irrespective of market caps, across caps. So we've done very well, but it's not just about us. It's about the general public at large, because most of the public were invested in the small and the mid-cap space without quality. So let me give you an example without recommending any stock. An Ashok Leyland, which fell just because some trucks could carry 10% more. It fell and then it recovered back. So if you've got the right stocks, even in the mid and the small cap space, even in the large cap space, you will do fine. But if you've got the wrong stocks, then irrespective of the caps, you're going to lose your cap out in the market. So I think over a period of time, it has been established, well established rather, that everybody makes money when a bull market is in vogue, right? 90% of the people lose whatever they have made in the 4 months of the bear market that follows a 4-year bull market. And it's the balance 10% if you can that are able to retain what they have made over the last 4 years. So this is nothing new. It's happened so many times elsewhere. And let me tell you, there's this theory about a handful of stocks picking up the Nifty and chasing the Nifty and creating the momentum. But if you look at the American stock market, the FANG stocks, the Facebook, the Apples and the Alphabets and the Googles and all that, they constitute $4 trillion market cap. The US stock market index, from what I recall, I'm not sure about it, is about $30 trillion. So these 4 or 5 companies constitute 12%, 13% of the US stock market capitalization. So if that is not concentration, what is? So if you look at it on a broader scale, whenever there is a bull market in vogue, there's just a handful of companies doing extraordinary well. And when every company starts to do well, it means the bull market is nearing an end. And it's very clear now, everybody cannot be rich at the same time. So there's only a handful of companies that do well for extended periods of time. But there are periods like it was last year and this year till January, where everything was going up, and then we saw what happened.
Yeah, that's true. Basant, the one pick that intrigues me in your portfolio is PNB Housing Finance. I mean, if you could tell us, because you would want to buy a DHFL, or there's a Repco which is there. There's so many private companies. Why PNB Housing Finance?
I mean, it's a great question. I wish I had an easier answer to it. I learned over the last 12 months that earnings is not everything. And it's a specific reference to PNB Housing. So irrespective of how great the numbers are coming out, the price isn't going up because there's a huge overhang of 50-60% equity waiting to be offloaded. So the theory here is, if you wait for this equity to be offloaded, then obviously the stock would be under pressure. But the moment that is done, the stock should come back on its vogue. It's growing at 40-45%, doing all the right things, controlling the asset quality, growing into newer, smaller tier 2, tier 3 towns and cities. So we chase, Anuj, as you know, we chase growth. So there might be other housing finance companies, but they're finding it tough to grow at 12 and 15%, whereas PNB, with its superb management, is trying to grow at 40-45%. And I think if it gets done, the stake sale, and these prices should be history, could rather. You cannot use the word should in the stock market. And this has been a pain for us in terms of the price. But you know what? I think in the stock market, the biggest conviction is price. Earnings is a close second, but still we try and balance it between the two.
Yeah, I guess it's sentiment, it's human psyche. People do tend to get fearful when prices are down. Basant, you like consumer stocks, but selectively. Now, I mean, I don't remember if you're still holding it or not, but Avenue Supermarts has been a big play for you. Anything else? How else are you slicing and dicing consumer?
So any consumer stock which can grow at above 20% is a great thing to own for the next, because the best part about this 20% growth is you can forecast this growth over the next 3, 4, 5, 6 years, which we normally do. So we hold a few consumer stocks here and there, but mostly we are into Avenue. And the reason for being in Avenue is again the same thing. It's growing at 30, 35%. I mean, it's taking away market share and all the cliched comments. But I think over a period of time, in India, the easiest way to make money, I mean, there's nothing easy in the stock market, obviously, but still, if relatively it is, by buying the private financials, because they are taking away market share from their PSU counterparts, and the consumer names, because consumer is like an autopilot mode. So it's like walking on roller skates on an escalator. So you don't have to do too much of effort. You buy it a little expensive, that's okay. Don't make money for 6 months, 9 months, and then once the earning catches up, you get your money back. So I think these are excellent long-term compounding stories, but who cares about compounding if the stock goes up 2.5 times in 1.5 years? I think so you will find different kinds of stocks here, but I think a consumer as a theme and NBFCs, the private financials as a theme, is a great is a great theme to bet on.
Okay, by the way, the stock that we referred to about 10 minutes back, let's just pull out that again. Indian Bank, intraday, it's down 6% now. We first flagged off, it was down about 3%, and since then this further decline which is taking place now, so 5.5% lower is what you have on Indian Bank. Basant, we had seen a big rally in PSU banks. SBI, of course, is a different story. You would ultimately, if you are bullish on India, you'll have to at some point be bullish on SBI. But you had numbers yesterday from or day before from PNB, and you saw the market's reaction. Your thoughts on this entire PSU banking pack? Valuation-wise, perhaps available at historic lows, but problems still persist. So how would you approach them?
Anuj, how do you compute value? When you don't know the book, the value itself is such a random, arbitrary figure. So I'm not being very skeptical about these PSU banks. I think if you're a trader, they are phenomenal things to buy because they go up 20, 30, 40%. HDFC Bank would never give you that kind of money over a period of weeks. But then for a PSU bank, don't be a long-term investor, because if you're a long-term investor buying any PSU bank, say the second line, the third line, not the Bank of Baroda's, not the SBI types, then I think you will make probably more money by doing an FD in that bank than by buying the stock of the bank listed on the Bombay Stock Exchange. So it's not a contempt thing, but I think it's very difficult to actually go out and value a bank, which even the RBI is not able to do. See how many rats come out from the carpet. So if the RBI is not able to value these banks, I think we should be taking a back seat. Yes, trade them. So for trading, I mean, the price is the only indicator for trading. You buy it when you see it's going up, and then you assume to make a little more, and then you sell out. But if you're a long-term investor, there are several other places to be a long-term investor. But if you want to take a punt and all, I think it's a great theme to be punting around.
Oh, by the way, the markets are really taking off. We're almost approaching 11,450 on the index. That's a 0.5% increase. Let's pull up HDFC. That's doing its bit. State Bank is doing its bit. The Nifty Bank is actually up 0.5%. Lever, Reliance, lots of legs today. Reliance is now 12.14, 12.15. Interesting move on the large cap space. Mid caps have also recovered actually quite a bit. Anuj, I want to discuss the market with you in just a second, but let's just take a word from Basant. Basant, what about the money? We were just discussing mutual fund data in the morning because retail flows are kind of, tapering off. You mentioned price is everything. When the price is high, the money follows. What is HNI money doing? I mean, people who invest in PMSs, is the confidence back, and specifically to invest in the mid-cap and small-cap space?
We are getting a lot of inquiries, but we are really a small fry in the entire ocean. Let me give you a different aspect to it. Anybody who goes for professional help I mean, isn't the most informed guy in the world. He's informed in the sense that he doesn't want to blow up his money on his own, but he goes for professional help. And when you go for professional help, it means you don't understand the markets. What you understand is returns. What you understand is the NAV. So the Indian investor, as I keep saying, hasn't been tested yet. I mean, Brexit came and went. Demonetization came and went. GST RERA came and went. The last 6-7 months have been the first big grind for him, and he is sticking on because the NAV of the previous units is showing him a profit. The real test for this guy would come around once the money that he's put in, I mean, comes back to the capital value. I'm not saying it's going to come, but you know, these retail investors, normally they are focused by the profits that they make in an investment. And of course, there's a huge new group coming up which is well understood, well informed, but nothing succeeds like success. So I have my doubts on whether this momentum is going to carry on for the next 6 months or 12 months if the market doesn't go up. And when I say the market, Nifty is not what I'm talking about.
Okay. So the last 6 or 7 months have been good for you, Basant. Last time you told me that as you head towards election, perhaps it would be time to Mamta-proof your portfolio. Have you started doing that in bits?
Yeah, to a large extent, we are well on way to do that, and I think that's the way to go about it. I mean, I think that's the extreme end of the assumption basket. A government led by Mamata Banerjee, but markets can get jittery on anything, so you have to be very sure of what you do.
Okay, Basant, always a pleasure talking to you. Lots of food for thought out there, and put it in very colorful style as always. Thank you for joining in. Okay, before we move on, Anuj, what thoughts on the market? I mean, Nifty approaching days high again. Bank Nifty is still far away from it, but what do you think of this resurgence?
Yeah, you know, as we discussed 230s, Surabhi, perhaps this is the dip that gets bought. Look, the issue here is this is a market where you're buying the dips till the time you're proven wrong. Chasing momentum, there is a problem. But if you're buying the dip, this market is rewarding you. And you know, that should be your strategy till that fails. At some point, you know, you'll buy one dip, that will not work out. But today the market gave you that dip at around 230. You know, you bought it, you made money. Also, you know, today what's been interesting is a lot of large stocks have moved. My only problem is again the market now once again getting, you know, large cap heavy. You know, the mid caps have again started to sort of dither a bit, though the index has moved back into the green. But it's once again your Reliances of the world, HDFC banks of the world, HDFCs of the world, which are really, you know, taking the market higher. So that's the only worry. But on the index, I think the call is very clear. If the market gives you dip, you have to buy with an assumption that, you know, that it's a buy on dips market.
Okay, well, on that note, let's get back to our experts. By the way, I mean, some of these multiplex stocks are still holding on to gains. We didn't get any kind of clear outcome from the High Court today. Inox Leisure is still up about 5.5%. PVR off the highs, but still in green. Prakash, any thoughts on this space, or would you stay away till there is clarity from the courts?
Yeah, so you know, just look at anecdotally the last 2 weeks ever since PVR came with its numbers, and then there was disappointment. It's recovered quite a bit. If I'm not wrong, it was around $150. And that basically shows the underlying optimism that people have that there will be a way out, which is not going to be so, you know, damaging for most of these players, and they'll be able to strategize in a way that they can offset that. But now we'll have to wait till 3rd September, which means the market will continue to see volatility in these stocks. There'll be divided opinion all the way. But I think the logical thing to look at these stocks is that they will continue to grow, but you need to make sure that you don't overprice and buy them at such price valuations that they get stretched. So 1400, 1450 was already overstretched. So probably the right levels that you see right now, particularly for PVR, I'm not too much of a fan on Inox, but PVR could probably be bought at lower levels, certainly for the long term.
Okay, well, by the way, just look at Havells intraday chart. I think it was same time yesterday that we, you know, spotted this stock. Has made a habit almost of making this 230 to 330 move. Just look at that. And, you know, ever since its numbers from 590, I think it's been a one-way move. 685 is what we have on Havells right now. Sudarshan, we didn't get your BTST calls. The index has recovered. That buying on dips has worked out. So you maintain that that's still the theme. And what about your calls?
Absolutely. And you rightly said, Anuj, this market is rewarding is to people who buy on dips. And you have to be alert to buy this dip. But once you are sure this is all I am going to do, it's easy. I think you should, again, tomorrow probably you'll get another dip. That's a buying opportunity. I also have Reliance as my BTST call. Reliance, by the time I sent it to you and the prices have gone up a little, but even then, it has a target of 1250. Hold on to it. And the second is Ultratech Cement. After that big rally, cement stocks have consolidated. That consolidation is on the verge of breaking on the upside, not just for Ultratech, but for ACC also. But I have Ultratech as the stock of choice for the day. I also have investments in...
We've got Prakash with us, and Ashwani and Sudarshan continue to be with us as well. Ashwani, I just want to get your thoughts on this resurgence that we've even seen on the Nifty Bank. It's being led by names like State Bank of India. Even some of the others like HDFC have been doing well in the last couple of minutes of trade. What's the view now?
These half-an-hour time-pass rallies don't call for too much. Let's see if we are able to cross and stay above 11,450. Basically, for me, it's 11,380, 11,450. The problem is you buy right now, tomorrow morning again there's a 70-point dip. So it's getting more choppy than in a big uptrend. So the way I'm playing this is, you give me gap down, I'll buy. Give me gap up, I'll sell.
Okay, that's interesting way to play the market. Adani Enterprises, just pull out the intraday chart of Adani Enterprises. Bad numbers, doesn't matter, the market, this is a different stock altogether. Also an F&O ban, of course. So curiously in F&O ban, just a day after numbers, and that stock up about 5% at this point in time. Prakash, before we thank you, thoughts on Adani Enterprises? I mean, till last month, perhaps the justification was that it was a short covering rally. There were shorts which were really stuck. Now, how do you justify this kind of rally after the results?
So bewilderment is the first word that comes to my mind, because I just can't fathom what's driving it. I mean, it's a stock that's, the last I saw on a trailing basis, it defies P multiple logic is some 135 times. Doesn't have a business model that you can really attribute great growth to it. The only company within this whole group, Anuj, which merits a little bit of attention is the ports business, because there is tangibility, visibility of earnings. But Adani Enterprises, for whatever reasons, people are fond of it, and I really wish they could share it with us. But I generally feel this is a market where these are very clear areas that you don't go into, and you could get caught very easily just if you follow price action. So some of these stocks which recover, start inviting and baiting people in, do well for a while, but then they disappoint even more significantly. So I think it's best to stay away when it's not understood so well. Okay,
by the way, pull up ICICI Bank. I mean, there are enough naysayers saying that this is nothing but a trading rally, but a trading rally that you can't ignore nonetheless. 320 almost on that stock. It's moving very smartly now. Days high on ICICI Bank. Also State Bank of India. Let's also pull up a 6-month chart, because these stocks are kind of rounding up after 6-month decline. So we're getting back to levels we last were in February, March, thereabouts for these stocks. So Darshan, your view, I mean, skeptics will always poke holes, but I mean, for traders, still go long on these two?
Which ones?
ICICI Bank and State Bank, Sudarshan.
Well, I'm upbeat on State Bank, and I just heard Anuj say that anyone who's upbeat on India needs State Bank in his portfolio. Absolutely, you must. See, I think the private sector banks are reaching a point where they will consolidate. So I would not buy it as a trader.
Okay, all right. Well, on that note, Prakash, we'll thank you for joining us on the show today. And let's now move to some opinion that we picked up in the course of our market conversations today. Ahead of the two-day MK Confluence Conference, which is beginning of tomorrow, we caught up with Krishna Kumar Karwa, MD, and Sindhu Sameer, co-head of institutional equity sales at MK Global. And we, of course, discussed a whole host of sectors with them, fund flows coming through, and, of course, the sentiment in the market at all-time highs.
Yeah, definitely. I think 3-4 months ago, there was too much of euphoria as far as the small cap, mid cap was concerned, and a whole host of factors got into play, including regulatory challenges, etc. and you saw a deep correction which was possibly waiting to happen. And I think what has happened in the last few weeks is that if you see the corporate performance across the board, that has been fairly positive. I would say more than 60–70% of the companies have come up as per expectations or better than expectations. And so post the correction, in the breadth of the market has improved substantially in the last few weeks. That's the as far as large caps are concerned, they have had, so the Nifty has continued to do well, basis 5, 6, 7 large cap companies doing very well. But so Nifty being all-time high, there was hardly any euphoria as far as the mass average investors were concerned. And you could also possibly see that your mid-cap, small-cap indices are still a distance away from their peaks, which they had reached in maybe Jan before that. So I think it's a recovery. I mean, post the deep cut which had happened in the small cap, mid cap, there is a decent amount of recovery. But I still feel that there will be a decent amount of volatility which will still be there in the small cap, mid cap segment, because going forward, liquidity is going to be a major challenge, both global as well as domestic liquidity. And you also see that as far as the domestic flows into domestic mutual funds, etc., are concerned, they are stable at 7–8,000 crores. But until unless you have a bigger amount of flows, maybe the small cap, mid caps is the segment where domestic houses would be reasonably cautious.
This time we've seen in the month of July, flows have fallen to 8,500 crores compared to an average of around 10,000 plus that we had in April, May, etc. Would you be concerned about that, or do you think that this is just an aberration, just a blip, and that flows will resume on the upside?
SIPs, which are around 7–8,000 crores, that's a very decent amount of flow, which possibly will continue to be there. But I think the discretionary flow, or the large ticket investors, they are the one who try to time the market, and possibly that is where we are seeing a lot of reduction in the flows, and maybe let's see when they become negative, if they become. And so the domestic flows are giving a lot of stability to the markets. The SIPs, which I think the domestic mutual fund industry in the last few years, the kind of education that they have done, and I think it's clearly reflective of the retail participation in the market. So I'm not so concerned in terms of whether the flows will become negative. I don't think so. It can get muted, or rather it may remain stable at these levels. That could be a possible scenario which we are playing out.
What's the institutional sentiment?
So institutional sentiment right at the start of 2018 was fairly reasonably cautious. But everybody seems to be surprised by the rise in Nifty which has taken place. All said and done, coming back to the retail flows. Now, even if 6,000, 7,800, 8,000 crores might be marginally dipping, but look at the absolute value of it. We were just discussing that 3 years, 4 years back, we used to think that we'll see a day when you will get an absolute inflow of $1 billion. So we are getting that. At absolute level, this is still astounding numbers. So the cult of equity and the virtuous returns which have been made over the last 10, 15 years, there is a qualitative, there is a change in the mindset which has taken place. So yes, there will be some kind of a hiccup, but if in the long arc of things, it really does not matter that much.
What kind of NBFCs do you think will still do well in this environment?
I'll put it the other way around. Where are the headwinds today? The headwinds are possibly in the housing finance companies. They are the ones which are in a rising interest rate environment. They're possibly going to be struggling for, and there's huge amount of competition in that sector. And so that's one segment of the business in the NBFC sector which possibly may struggle for maybe a year or so. And so that's where the challenge is. But otherwise, if you look at the rural India facing NBFCs, they seem to be in a sweet spot in terms of, because the growth seems to be in excellent in the rural area, rural part of the country. And NBFCs which are focused on rural India, they seem to be doing...
Okay, 451 is the profit number on Cipla that we have got. That's decent. Now, the revenue is the question. 4090 is what we're working with. So, just try and drill down to the revenue number. That should come through. That will translate into a growth of 16%. We're also expecting a slight margin expansion for Cipla. So let's see if that's happened or not happened. Okay, these are standalone numbers. Let me drill down to the consolidated and see what they have done. 3938 is the total income from operations, which doesn't include other income. Total income, if you see, is 4109. I
think the net profit number is something that the street likes. Also because, you know, there were some shorts in the system. But I think that's the big number. And you're seeing a lot of short covering now on Cipla because since morning, people were short expecting a bad number from Cipla, but that's not the case. So, revenue is below, and I think EBITDA is also below estimate. I think there could be some one-offs here. That's the EBITDA margin of 18.4% versus our estimate of 19.2%.
So we haven't had that margin expansion. Don't have the press release immediately to talk about what perhaps would have happened. But what 8th's poll has told us that US should do at least 10 to 12% in terms of growth. And the India business hopefully should be steady because there's the low base impact of GST as well. But right now on that top line number, it's a bit of a question. But, you know, the stock is
the stock is surging. Just see the intraday chart of the stock. Also because, you know, this is where the market positioning perhaps becomes important. This morning there were some shorts. Yesterday also the stock ended at the low point. 8th is here to tell us more. 8th, the net profit number is clearly above estimate. But are there any one-offs? Because the EBITDA number and revenue number is below your...
you know, actually, I just want to point out that the EBITDA has improved on a Q-on-Q basis. Last quarter, the margin came in at 15% versus expectations of 19%, and now it's improved to 18%. So despite that little bit of a disappointment as compared to our poll, it's come in within that 18 to 19% band, and that's what the key positive for Cipla is this time.
All right, Ekta, thanks a lot for that. Well, just about 2 minutes left for markets to close. Neeraj Dewan of Quantum is with us. Neeraj, you know, your thoughts on Cipla and Lupin, two companies which came up with numbers. I'm sure you wouldn't have studied Cipla numbers till now, but overall thoughts?
Yeah, whatever I could hear of Cipla numbers, I think they were disappointed. And looking at pharma stocks, anyway, there aren't too many pharma stocks which are really money for you, and Cipla falls in the category which has made money for you in the last couple of years. So Lupin again was a disappointment, though we were not expecting good numbers. But then even the numbers which came were disappointing. So I think they can still be, you know, a continuation of investors will stick to companies like Cipla, and I think Lupin will still be avoided till you see some better numbers there.
You got Natco Pharma's numbers also pouring through. 574 is what Natco has done on the top line. That's not too good if you go by some of the street estimates that were floating around. Their profit number is 181 crores, which is better. But some top line issues with respect to some estimates, at least the one or two that we had. But anyway, it's time for close. So we'll go through the numbers later. But I know, on the large cap side, again, this has turned out to be a good day, right?
Oh, yes, it has. And I mean, if you take a look at what the Nifty has done, today is a bit of a breakout. Then after that, the market gave you a bit of a dip. And I think this last hour pullback is really something which is going to enthuse the bulls. So have to make a point here. Tomorrow's weekly options expiry. So anecdotally, you don't get too much joy on the weekly options expiry day. So let's see how things move there. Stock of the day perhaps is Reliance. 3.5% higher on that stock. It's got a market cap of 7.7 lakh crores now. Huge move on the stock. In fact, the last hour move was essentially led by Reliance on the Nifty. Then, of course, you had stocks like ONGC rallying 3%. Cipla was up 2.5% post those numbers. Bajaj Finance, another life high for that stock. State Bank of India was up about 2%. Tata Motors was up about 1.5%. Titan was up. On the way down, Lupin post the numbers down 5%. Maruti down 2%, and HPBP ahead of numbers were down.
On the mid-cap side, I don't really know what to say. All kinds of stocks have actually moved higher, though the index is absolutely flat. If I start off with some of the major names, and some of the Adani Group stocks are definitely worth noting. Adani Enterprises 8% up, Adani Power 7% higher. So these are some of the names you can't ignore. Some good result reactions in the form of Meghmani Organics, 7% up on that stock. Again, Minda Industries was a good number to look at. Q1 numbers, that stock's up about 1% thereabouts. City Union Bank's numbers were okay, and they were well received by the market, 2% up over there. But let me talk about where the momentum really was, because on the gaining side, HEG 8%, Reliance Communication, because the deal seems to be going through with Jio, 14% up over there. Philips Carbon has added more weight. Inox has had a big rally, Inox Leisure that is, about 7% up on that stock. Automotive Axles is up about 7%. Hathway, you remember how badly these MSO stocks were beaten down after the Reliance Industries AGM. Well, Hathway is up 9% today. Patel Engineering on that order win was strong from the morning. It's retained most of that excitement. Then we've got something like a Tejas Networks that's been higher. So all kinds of stocks, some of the smaller stocks that were up. Strides Shasun was a good number. 5.5–6% on the stock. And definitely there's one mid-cap star of the day. Not really that it's a mid-cap, but Ashok Leyland. Management commentary has fired up that one, and how stocks at 125 after today's run. Big mover out there. VIP, United Spirits. These are some of the other names that you can note. Even a First Source up about 3% thereabouts. Where was the disappointment then in the mid-cap market? Well, Edelweiss for sure, 6.5% down. BEML's numbers weren't too good. Indian Bank very nervous ahead of numbers, 5% down. So these were some of the grey areas. And aviation, let's not forget aviation, because Jet, Interglobe, SpiceJet, all these stocks have had to face lots of turbulence today. So that's something to keep in mind. Very, very stock specific on the mid-cap side of the market today.
Oh yes, let's take final thoughts then from our guests. Ashwani, so final outcome for the day, we have still ended close to the high point of the day.
See, the market is rising, but the only problem is it's quite vertical. So you will have several such days when you go up, come down, again end at the highs, which is not very conducive for trading, because the stops tend to get violated. So still the best way to trade from here is to buy intraday collapses or to sell intraday surges. Today you had both. So that way, you can increase the safety of your trades. But overall, till it's up, your stops are now 11,380, 27,850 on the Bank Nifty. And basically, I would call it sideways to up, where end of the day you may have protected gains, but intraday you'll see a lot of choppiness.
Okay, and Sudarshan, your thoughts?
Well, see, the trend is up, and it's becoming a little more volatile, and that's natural as we go higher and higher. But we have only a single point view. If there is a dip, we want to buy. That enables us to take the trade quickly, and that's what we'll do tomorrow. I think we'll have a big dip tomorrow when we would like to buy it.
Neeraj, today we were a little short on time, but on the mid-cap side of the market, going by lots of the earnings that have come in last couple of days, what are the one or two numbers that stood out, and a buy call, therefore, that you would hold on the stock?
Yeah, see, there have been specialty chemical companies. You saw good numbers from Make Money. One such company, SRF, also came out with very good set of numbers. I think so. The market has been narrow, but with the good numbers coming, so some of these companies, I think you can get some broadening of the narrow market that we've seen. So in the auto ancillary, like Jamna Auto and has come out with a good set of numbers. Minda Industries came out with a good set of numbers. Then BL was a very good set of numbers. Then the order book is really swelling there. The execution is picking up. So that would be one space. And in the construction equipment and the agri equipment space, Scott's Action Construction have come out with a good set of numbers. I think these stocks definitely look good for next 1.5 years also. So you've got in the mid-cap space some numbers which are liquid mid-caps, where I think the correction has made them very attractive entry points at these levels.
Well, our colleague Sapna Das caught up with Vikram Limai, CEO of the National Stock Exchange, on the occasion of the exchange's Silver Jubilee celebrations and the unveiling of its new brand identity. Take a look at what Mr. Limai had to say.
The co-location issue is something that we're in discussions with SEBI for some time now. SEBI has concluded its internal investigations, etc. And we will resume conversations with SEBI to see how we can resolve the issue. The timing of the IPO is obviously linked to when we're able to resolve the co-location issue. So on that, I can't really give you any visibility till I get some clarity on how this will progress and how long it will take.
But the co-location issue, any timeline that you can expect, like 3-4 months down the line?
I don't want to commit to any timeline because really it's a process that we have to go through with SEBI, and I don't want to really commit to any timeline till I have some clarity on that.
Right. Mr. Lumaya, one more quick question, or rather a couple of quick questions. I suppose October 1 is the timeline that has been given by the market regulator in terms of, exchanges like NSE, probably even BSE, launching commodities trading. Can you give us some clarity on that?
So we're obviously, as we announced earlier as well, we're ready to launch commodity contracts from 1st of October. We're going through a process with SEBI where SEBI will go through an inspection and review of our systems and products and all that to see whether we're ready to launch commodities on 1st of October. We will obviously require an official approval from SEBI before we launch those contracts, but we're obviously geared up and ready to launch commodity contracts from October 1st. And we will start with non-agri products. And those are particularly in the bullion, energy and metal space.
Right, but won't the well-established bigger exchanges be in kind of in competition with MCX and the rest of them, sir?
Yeah, but that's a framework that SEBI has approved in terms of universal exchanges, and therefore it is a new segment for us. And we will see how we can develop the commodities market.
A lot of talk also possibly down the line about a merger kind of a situation between the established commodity exchanges and the universal exchanges. Any comments on that?
No, I'm not going to be able to comment on that. As you know, MCX is a listed company. It has already filed a statement with the exchanges specifically on this matter, and you'll really have to take that as the situation.
One more quick question, sir. October 1 probably is also the timeline that SEBI has given in terms of the exchanges following extended trading hours. So what's the status on that front? When can we expect this, if at all the exchanges are going ahead with it?
So again, from 1st of October, we're certainly gearing up for extended trading hours, and we've said that we will offer derivative. I mean, the extended trading hours are for the derivatives market, and so we would be launching derivative products till 11:55 is when the trading would continue. So that is something that we will execute from October 1st.
What about 5 p.m. timeline or something like that? And what about the cash market, sir?
No, so right now the cash market will close at 3:30 as it does, and then the next trading session will start. What we've said is that we'll give a break and then restart the second session from 5 o'clock.
Okay, from 5 to 11:55.
That's right.
Right, sir. So also, a lot has been asked on this SGX issue. Can you once again fill us in on the new framework that you're thinking of? Probably the arbitration. You may not need to go through the arbitration process, and how is it going to really, resolve this issue? Any look forward?
Yeah. So on the SGX matter, as you would have read even in the press release that SGX and NSE made, and SEBI and MAS also made, we are hopeful that we'll be able to come up with a structure that actually works for market participants and the regulators. The idea is to try and figure out an orderly transition of liquidity from Singapore to Gift City. And the philosophy behind what the exchanges did at the outset in February was because fragmenting and exporting liquidity is not in the long-term interests of Indian markets. So the idea really is to consolidate liquidity in Gift City, and it's in that regard that we've been discussing with SGX and with regulators both in Singapore and SEBI to see if we can come up with a framework that works for everyone, the markets, regulators, and for SGX and NSE. Because I do believe it would be a win-win. It is important. I think market participants would like to continue to trade Nifty.
Okay, so the NSE is absolutely clear. Gear up for extended trading hours in the futures and options market at least. The second session, as Mr. Lima explained, will start at 5 p.m. and go all the way up till almost midnight, 11:55. So that's a new era that will dawn on the 1st of October. Let's now move to some corporate headlines. Earlier in the day, Future Consumer signed a joint venture with a New Zealand-based multinational dairy cooperative to provide high-value dairy nutrition in India. Our colleague Priya Sheth caught up with Kishore Bayani, CEO of the Future Group, and began by asking him about this partnership.
I think this is a partnership of equals in a way. Fonterra, which is a New Zealand company, Future Consumer, which is one of the Future Group companies, both have come together in a joint venture partnership of 50-50 to build, develop and to scale up dairy business in the country. And that's the partnership which we are announcing today.
Talk to us about how the distribution will play out for the company, and will you be using several of your stores as touch points? Will it be a subscription-based model? What is the kind of model that you're working on?
So definitely we will be using the small store reach and the big format reach of our group. Additionally, Future Consumer is also building a general trade model where future retail stores do not reach. So we will be using all our touch points. In addition to this, yes, we will be in general trade as well, and we will build models such as subscription and door-to-door delivery.
About 10 to 12% of sales comes from dairy in the stores that you sell your products in. How much would this shift after these products kick in? And what are the kind of medium to long-term revenue targets that you have for this business?
I think 7 to 8% is our current sales in small stores on dairy, but some very good stores like Food Hall does 13-14%, and some good stores, dairy can easily sell 10 to 12% of your sales, provided you have a range, assortment, availability all happening. And that's what with this joint venture will bring in, that it will up the sale of dairy products in our stores once you have consistency, quality, supplies and supply chain perfection. So that's what we are looking for.
Losses have narrowed to 6.1 odd crore rupees. Do you think that when can we expect profitability to start kicking in, and what's going to be the the roadmap towards profitability?
I think I'm not giving a guidance on that, but
at the standalone level, we are already profitable, and towards the end of this year, you'll see a better performance for us. We're not specifically talking about Future Consumer results today, but dairy partners.
But I think the growth, we expect to end the growth probably at maybe 40-45% level.
You had rolled out the Tathastu strategy at Future Group, and store expansion was a big part of this. Run us through what is the expansion plan for this financial year in terms of stores?
I think we are looking forward to, currently we will be soon reaching 3 stores a day kind of opening for small stores, wanting to move up to 6 stores a day by next year. We are opening around 30 new big bazaars. As a group, we are opening, we'll be touching 118 brand factories by March from currently 70. So there is an expansion all around which is happening at the group, maybe 2.5 million square feet of addition this year. So expansion is right on the track. We think we have been a little slow on growing up on our small stores, so we are increasing that pace and making all things come together. So we are currently at 1.5 stores a day kind of a number, which we want to raise it to 3 and then move up to 6 stores.
So by this end of this financial year, how much would that be?
Currently we would be at around close to 1,000 stores. We want to end March 19 close to 2,000 stores.
Okay, those are all the big plans afoot for the Future Group. Well, as we take a break, let's actually get back to that update on the fire that's broken out at a BPCL plant. We have Yash joining in with some of the details. Yash, what is the latest? We hope there's not too much damage, human or otherwise.
Well, Surbhi, the initial information that we've been receiving from some of the BPCL officials and the government officials is that a level 3 fire has been reported at the BPCL refinery in Mahul. This is near Chembur. As far as the relief operation is concerned, so far the updates have been that 9 fire engines and 4 ambulances have been mobilized to the spot. Unfortunately, so far there have been no casualties, but we'll keep you updated as in how we get.
Poor demand from bulk buyers is one reason. The other, of course, is the higher production this year and expectation of an even higher production of sugar in the next year as well. But joining us to talk more about that is Avinash Verma, Director General at ISMA. Avinash, hi. Thank you for joining us. We do understand that ISMA has written a letter to the government asking to make changes in the sugar MSP and, of course, making exports mandatory as well. What really is the details onto this one?
See, the background, we need to understand why we have written a letter like this. The current policies trying to export 2 million tons in the current season up to 30th September has not worked. And therefore, we believe that the current policies which are not encouraging exports need some tweaking and some changes in the policy. First of all, out of about 20 lakh tons or 2 million tons, just about 3.5 lakh tons has really moved for exports because there is a big loss on exports. So therefore, we are telling the government for the next year's program, we should look at almost about 6 to 7 million tons of exports from India because the surplus is huge. If we talk about 35 million tons of production next season, we are looking at a closing balance of around 18 to 19 million the year thereafter. And if that is the kind of closing balance, we need to export 6 to 7 million tons. And unless that is made compulsory, people are forced to export, it's not going to succeed. It's a huge challenge. So what we have told the government that there is a big loss on exports. If the government compensates by way of subsidy, which is going to be not easy, we have said that let us compensate, let us get the losses covered from the domestic market, and 80% of our sugar, if we sell in the domestic market and if we are allowed to cover our costs, for which the Government of India needs to increase the minimum price of sugar from 29 to 36 rupees, then we will be able to export 20% of our production at a loss, and we will not seek any subsidy for that loss.
But what are the chances that the government will do this? Because 29 to 36 is quite a jump.
See, let us not look at 29 to 36 jump. What we should look at is we have sold sugar in 16-17 sugar season at 36 or 37 rupees at the mill gates. And the retail prices remained at about 43, 44 rupees in the last season. And no consumer complained. This was the price which was there despite shortage in 16-17. Now there is surplus sugar in the country, and therefore if the prices are moved to 36 rupees at the mill gates, the retail prices should not cross 43, 44 despite an increase in the FRP. So therefore, let us not compare the current 29 with 36. What we are saying is that our cost of production is 36. We should be allowed to get that price. And since the Government of India itself has brought in a policy of minimum sugar price, it should be actually at our cost of production and not below that.
Fair point that. One final question on the arrears as well, and that has been building up. There were reports on how Karnataka government also is now pulling up mills for not repaying in time. How bigger a concern is that with the other states?
See, it's a huge concern, and I'm sure the government itself would be very concerned about those numbers. We saw a statement by the Honourable Minister in the Parliament where he said that the current cane price arrears is around 16,000 crore at the end of July or the beginning of August. I have been associated with sugar for the last 13 years. I have not seen these numbers sometime even in June or July in the past ever. And therefore, 16,000 crore in the beginning of August, I don't think we will start the next year with a clean slate. It should be anywhere between 10 to 12,000 crore of areas starting 1st October 2018, which is a big concern. And therefore, we need to find ways to ensure that the sugar mills get revenue in addition to what they get from the domestic market to pay to the farmers. And that is the biggest concern. Next year also, that is what we need to do. If we're going to produce 35 million and sell only 26 million in the domestic market, we need to supplement that with some more cash flows, which can come about only through exports.
Point taken, Abhinash. We'll let you go at that. Thank you so much for joining us. That, of course, is the detailed explanation coming in from ISMA on the letter or the presentation that they have made to the government in sense of industry, the minimum support price, and, of course, the export requirements as well. That's sugar, but plenty has been happening in the metal space today. And to talk about that, we have with us now Kunal Shah, Head of Commodities and Currencies at Nirmal Bang. Kunal, hi, thank you so much for joining us. It has been a good day as far as the base metal space is concerned. Of course, much of those cues have been coming in from China and, of course, short covering. Are you comfortable now buying at these levels?
It seems like an oasis after so many days of hurricane in commodity market. But jokes apart, I think going forward from here, we are going to see a pullback. There is too much pessimism in commodity complex in context to what is going on with US and China trade war. But I think in so much pessimism, I do not expect prices to crash or prices to correct sharply from here. We are going to see a pullback from here. We are going to see metal prices edging up higher. But the fact is that are we going to see again the new highs or prices near new highs? There are no triggers for that. So I'm expecting a pullback in metal space, and hence I'm recommending to go long in some of the metals such as zinc, in which the production has declined by 5%. So one can go long in zinc for the upside target of 185 to 186, and stop loss should be placed at 177.50.
Kunal, how are you also looking at the gold and silver prices? Because it has been a good day for this space as well. The markets are watching out on what US and Iran do. The US dollar has paused in its rally, and the gold prices clearly have been quite sold, as we have seen in the previous quarter and this month as well.
I think the Going forward, gold and silver in the short term can remain under pressure because of ongoing strength in dollar and weaker investment demand. But the broader long-term outlook still remains bullish. So in near term, we may see silver may edge down and test levels of 37,700, or for the same reason, gold can edge down to and test levels of 29,500. So in a short term, it is likely to remain under pressure, but the broader term outlook remains very attractive.